Warren Buffett, on his way out the door from Berkshire Hathaway, just sent a huge warning sign to investors. We're going to watch this video today and learn just what that warning sign is.
Just invested $4.3 billion in Google. Last week, Wall Street heavyweights released their quarterly 13F filings. These show what stocks they bought and sold over the prior 3 months, and they offer unique insights into where the smart money is placing its bets.
I hate the term smart money and dumb money. Now, granted, I'm sure he doesn't feel that way, but smart money is, quote, institutions. Dumb money is, quote, the retail investors like you and me. You can be a very smart investor. You don't have to work on Wall Street. You don't have to run a hedge fund, but you do need to treat your account like a fund manager. Now, I will give him that point, right? A normal person is dumb money all day because they don't know how to get in. They don't know how to get out. They don't know how to position size. They don't know anything that we teach over here at Outlier. You are different. If you're watching this, you are different. You are an outlier, right? If you want normal returns, this is not the place for you because 90% of people blow up 90% of their accounts first 90 days of trading. It happened to me twice. I was normal and then I stopped trying to be normal and I decided I wasn't going to do the same thing anymore. So I don't want you to consider yourself dumb money. That's honestly a bit offensive to me. I would consider you an outlier.
The Oracle of Omaha's report, shown here, shows his complete stock portfolio as of September 30th, 2025. Now, Buffett is one of the least active investors on the street. He likes to take large, concentrated positions in companies that he can hold for decades. And other than a few small trades here and there, he only takes 1 or 2 big swings a decade. He started buying American Express, for example, in 1991, taking a $300 million stake. He kept buying until 1995 for a total investment of $1.4 billion. Then he just sat on it and has continued to sit on it for 30 years. It remains his second largest position, now worth over $50 billion. He did the same thing with Coca-Cola. His $1 billion investment in the early 90s is worth $26 billion today, and he collects $800 million a year in dividends. Now, his last big investment was Apple, which he began accumulating in 2016. Between realized and unrealized gains, he has booked a whopping $166 billion profit and climbing. So when Warren bets big, the whole world pays attention. And right now, his sights are set on Alphabet, the parent company of Google. Now, this purchase is especially significant given Buffett's flight to cash over the last few years. The Oracle is a devout value investor. When he believes stock valuations are too high, he simply doesn't buy them. The blue line on this chart shows Berkshire Hathaway's cash position.
Let's go. He's sitting in cash, not effing up.
Just the last 3 years, this cash war chest has surged from $100 billion to nearly $400 billion. Folks, only 20 companies in America are worth more than that, so he could have bought just about anything he wanted in cash, but he hasn't. So the fact he is buying Alphabet here is telling. It says that the only S&P 500 stock that Warren Buffett believes offers a good long-term value is this.
So by all means, if you want to hold on to something for 60 years, now's your time. Grab some Google for the next 60 years. I don't have 60 years to wait for my investment to work. I'm just saying.
Here is his full portfolio, minus a couple of tiny positions at the bottom that got cut off here. But let's look at what he bought and also what he sold. Now, he made a couple of trims. He trimmed 15% off of Apple here, and that's not surprising.
I actually really appreciate coming from a YouTuber point. I really, really, really appreciate the fact that he's looking at the chart on the screen versus like, imagine if his screen was over there, so he'd be looking that way. That's a nice detail that I, as a YouTuber, I really like.
Surprising. He's been reducing his Apple position since early 2024. And again, this is really telling. Remember, Buffett likes to buy stocks and hold them for 10 or 20 or 30 years. He's famously said, quote, "Our favorite holding time is forever." So even a 7 or 8 year hold like here in Apple that he begins reducing is unusual for someone like Buffett. It says that, hey, I thought this stock was a huge value. It obviously was. He made a bundle of money, but now the stock is overvalued. I want to begin getting out of this stock. And so he has done just that over the last 18 months, and I wouldn't be surprised if it continues. He also trimmed 6% from another of his long-term holdings, Bank of America. He cut 5% from DaVita, was a little medical nursing company, and reduced his position in VeriSign by 32%. Now, VeriSign has been a monster as we move to, this is what lets you sign documents electronically.
Yeah, look at this professional YouTuber setup right here. Green screen background where he's like superimposed on the stock. Let's go. I'm loving it. This is good stuff, Ross Givens.
without having to sign the stuff, fax it in, or mail it in. And the stock is up over 5-fold over the last decade. So unsurprising, he took a bit of a trim there. He also sold out completely his position in D.R. Horton. I think this is a pretty smart move. A lot of the smart money investors that I track have been building up positions in these home builders over the last couple of years. We thought we were going to have a ton of rate cuts in 24. We thought we were going to have a ton in 2025. Those have just trickled in here at the tail end of this year. So the housing boom they were betting on has not happened. He sold a lot again in the third quarter, which was this kind of June, July, August, or excuse me, July, August, September area right in here. So I think he just tried to get out while the getting's good and is taking off his bet on.
Hold on. Let's look at this together. DHI. Let's apply the Outlier Trend Template to this. Wait a minute. When was this recorded? Those are weekly candles. I was going to say, hang on a minute. That looks terrible. That looks terrible. Okay, hold on. Let's see if we can time this. This is early July right here. So if we look, what? Oh, no, remember, weekly candles. Okay, so July was here. Then it went up and then it came down. We're looking at the same thing, just different time frames. In fact, let's do this. Let's do a side-by-side. We'll do dailies on the left, weeklies on the right. So I need to change this to DHI. And then we're going to change that to weekly. And it should coincide with each other. And I believe if I do it correctly, my cursor will even be in the same. Look at that. Professional YouTuber. Cool. All right. So in this case here, he's looking at weekly charts, right? Buffett was holding it on the way up. Buffett's been holding it for a million years. But at this point right here, this is the 10 over 20, price over 50 on the daily charts. It crossed down the peak. You know, the downtrend actually started on October 7th. Let's mark that on the chart right there. That right there was your exit signal. If you were holding it at that point, it's now in a downtrend. Okay. So it doesn't have to be that difficult. When the 10's over the 20, price over the 50, it can run. When the 10 goes under the 20, price goes under the 50, it can run the opposite direction. Now, who knows? I'm going to give a gold star to somebody. What does this look like? Who's the first person to say what I'm thinking right now? Who's the first person to say what I'm thinking this looks like right now? Go, go, go in the chat. In the chat. Come on. I'm looking for it. Looking for it. Market cycle. Dr. J. Gold star. Gold star. Be the casino. Gold star. Slipknot. Gold star. Ween. Gold star. Nathan. Gold star. Trend Monkey Trader. Gold star. Brian. Look at you guys. I'm so proud of you guys. Y'all getting so smart around here. Cameron, I hope this is as good as your MBA. I hope it is. I know it's definitely paid me a lot more than my MBA did. Now, looking at this, right? This is what the market cycle looks like. This is the reality, right? It's not a theory. It is reality. What's cool about this is Warren Buffett probably knows what the market cycle is too. This is on weekly candles. This is what those weekly candles play out on the daily charts. You can ride it on the way up and not ride it on the way back down. How much of a drawdown is that since that point here? 18%. Not the worst, but certainly not the best either. Just imagine if you could sidestep those. Imagine if Warren Buffett used the Outlier Trend Template because it's just math and it always works because it's just math. He'd be way better off than now.
The home building boom. Now, in terms of addition, as you can see there in green, Alphabet, ticker GOOGL, is his only new addition. Picked up 17,846,000 shares of 4.3 billion. He also added 16% to his position in Chubb Limited, ticker CB. Now, Chubb is a...
I've traded Chubb before. Let's go look at Chubb. Chubb is not a banana stock. It is actually an insurance stock. If you catch that joke, put a number 1 in the chat because that was a dirty joke. Chris just said a dirty joke on the internet. Okay. You're trending up right now on Chubb. Trending up right now on Chubb.
An insurance company, and Buffett and Berkshire Hathaway have famously loved this sector. And the reason is they can do what's known as investing the float. He likes these insurance companies because they bring in billions of dollars in insurance premiums. That money then is held by the company until a later time, and it must be paid out for a customer claim of like a car wreck or a house fire. And so what he can do is take these billions of dollars, invest it in the stock market, what he believes are undervalued companies, and then make money on that while it's waiting to be paid out. So it's sort of
and that is true right now. Now, at the end of the day, your goal and Warren Buffett's goal are the same goal. Have more money in your account today than you did yesterday and more money in your account tomorrow than you do today. We all have the same goals at the end of the day. The idea of value investing is a difficult one because basically you have to find a stock that is already already been beat down so hard. The market telling you this is a terrible stock. It's going to go down and go down hard and fast. It does. Somehow you have to pick the ones that are going to show promise and in the future go up. And if you're holding it for 60 years, pick whatever, it's going to go up, right? That's just inflationary. But if we're looking on a shorter term horizon, like my portfolio and your portfolio, it's way easier to buy stocks as they're crashing up versus stocks as they're crashing down. Now, Chubb right here, the big banana stock, is having a very difficult time really making one way or another. And I want to talk about this because this is a great example of what I mean by you might make a buck or lose a buck inside of these trends, right? Your 10 went over the 20, price went over the 50 here, and then it went down, and then it came back up, and then it went back down, and then it came back up, and it went back down, and then it went down, and then it came back up, right? This is a sideways trending stock. This is a difficult stock to make money on, right? But if we zoom out a little bit more, you can see there's your stage 2 uptrend that you want to get. And when you see the moving averages cross right back and forth a whole bunch, that could be your stage 3. That's why it's guiding sideways like this, is because the greed has evaporated out of here and people are starting to bounce between euphoria and complacency. People are starting to say, you know what, maybe I should get a little bit fearful on this. Maybe I should still be a little bit greedy on this. That is what the top looks like. Now, am I saying that it's going to crash right back down? I don't know. It's a banana stock. It's probably going to crash right back up. Who knows? But I want you to understand that anytime a big, beautiful trend like this happens, the trend template lines up. But not every time the trend template lines up will it result in a big, beautiful banana up move. Okay. I know I'm just throwing out the banana jokes. I'll cut it out. Hang on. Susie's here. I'm embarrassed to ask, which is why it caught my eye. But Susie, we're here for you. All of us are outliers. We all want to be successful in the same way, okay? But I hope someone can help me. I just joined Outlier yesterday. Congratulations, Susie. Everybody put Susie in the chat. S-U-Z-Y, Susie in the chat. And created a Discord account. How do I get the Outlier or Christopher's feed? How do I get the Outlier Christopher's feed? Maybe you're asking about the trades that I put on. On the left-hand side, I have mine saved as a favorite. You can go to the Outlier trading room and you'll see all my trades. Now, these go back for years of trades. So you can see every trade that I put on for years. But right now, I'm just sitting in cash and sitting in SGov and not effing up my portfolio. There's lots of times where I'm doing exactly that, right? The rule of thumb is that 40% of the time a market is trending in your direction. The other 60% of the time, you don't want to break anything. You don't want to break your portfolio. So if that's what you're looking for, that might be what you're asking about. And by the way, this is exactly where I'll be putting all the trades that I enter into the US Investing Championship, which I'm super stoked about. Mahesh should be funding that by the end of the week. And I'll have $50,000 that we're going to trade live, 50,000 real dollars, not paper trading, that we're going to be trading live in the US Investing Championship with the intention of winning. One of us outliers is going to win. I'm very confident in that. I would love to be the winner, but what I'd love even more is for one of the other outliers to beat me using the same outlier data. That's what I'm excited about. I saw that, Mikey Mike. Let's keep going.
Leverage play. He's been a big buyer of Chubb Limited, continues to buy more here, and I can see why. I mean, this is a weekly chart. Notice the big run up here in 2020 and 2021. The stock then went sideways for about a year and a half as it consolidated, formed another big strong rally into mid 2024, and has done pretty much the same thing here over the last year. So it looks like it wants to break out into new highs and begin
totally possibly could
surging as well. So another 16% into Chubb Limited. He also made a small 4% addition to Sirius XM, ticker SIRI. And I'll be honest,
I used to have Sirius XM, and when did I stop? I guess it was Spotify that came out. I stopped using Sirius XM years and years ago, and I was actually thinking about them just a couple of weeks ago because I used to I didn't listen to Howard. I listened to Opie and Anthony. You probably know Opie and Anthony. I listened to the Covino and Rich show. I listened to several shows, and I really enjoyed it at the time. But then it's like, I didn't realize SiriusXM was still in business. With the amount of internet and the availability to basically stream anything you want, anytime you want, I don't see why anybody needs SiriusXM whatsoever. Kasha says, OMG, I love O&A. Yeah, back in the day. And then Anthony went crazy. Yeah.
I don't see this one. I mean, I don't know about you, but I don't know a single person who has a Sirius XM subscription. And this chart is just
That's exactly what I'm saying. I don't know either.
about as ugly as it gets. This thing is banging on the $20 mark. Looks like it wants to break lower. So, hey, maybe the Oracle knows something I don't, but this is one I'm not going to follow. And then finally, he increased his position in Domino's Pizza by another 13%, ticker DPZ. And Domino's is like the ultimate sleeper. Nobody's been watching this thing lately, but while no one is paying attention, everybody's been focused on tech over the last 15 years.
Anybody see it? Anybody see it? That is a market cycle. That's a market cycle. That's a market cycle right there. Now, you can have it happen where the right side of the chart ends up being higher, which is exactly what we see on Domino's, right? Your stage 1, your stage 2, your stage 3, your stage 4 doesn't come all the way back down. And then your stage 1, stage 2, stage 3, stage 4, stage 4 doesn't come all the way back down, right? It's precisely exactly what we see on Domino's right here. Isn't that cool?
Domino's Pizza has quietly surged more than 6,000%. So just a quick lesson for you. You don't have to get into tech and AI and the stuff you know nothing about to have success in the stock market. Buffett
It's not cat ears. It's Batman ears.
has killed it with his position in Domino's Pizza. So here's the full summary of Buffett's actions in the second quarter. He took a new $4.3 billion position in Alphabet. He added to his positions in Chubb Limited, Sirius XM, Domino's, and Lamar Advertising, which is that company that has all the billboards on the side of the interstate. He also closed out positions in DR Horton and reduced his stakes in VeriSign, Apple, Bank of America, and Vita. Now, many of you know I've been trying out a new brokerage platform, which is Moomoo, and I'm kind of going.
No. If he's going to pitch, I'm going to pitch. Did somebody say Outlier University?
Are you ready? Let's go! Respect is earned. Respect is never given.
That's right. Outlier University is my way to help you find success in the stock market. I'm going to teach you everything that I know over 16 years of trading. And some people would charge $12,000 a quarter for what we are for even worse than what we're going to give away. So much value, absolutely free to you right here on YouTube. Every Tuesday and Thursday, we're going to go live for our members of Outlier, and then it will be replayed on YouTube and live on YouTube forever. I'm going to teach you literally every single thing that I know about trading. Now, 50% of you are going to listen. It's going to go through one ear and out the other. You're not going to do anything about it. 25% of you are going to listen. You're going to put in the work half-heartedly, and then you're going to end up losing your trade. And then you're going to say, Chris made me sell my SoFi shares, right? You're going to turn around and blame me because you did something wrong because you weren't paying attention. But the other 25% of you are going to listen, you're going to pay attention, and you're going to create generational wealth, because what we are going to show you here, we're not holding anything back. There is no paywall. There is no upsell. There is no anything other than you finding success on Outlier University. So hope you tune in for that. Let's keep going.
In our Insider Effect service a few weeks ago, ticker MBX. We bought it right here on October the 29th. It is currently up from that point around 46%. But let me show you why we bought it. Again, we're going to go over here to shareholders, and down here, we're going to select the Insider button and look down here at this lower table. You can see whether insiders at this company are buying or selling. If the shares traded as green, that's a buy. If it's a red, it's a sell, and they are without question.
That's interesting. I want to see this in Outlier. Let's go to MBX. Oh, we don't cover MBX? That's okay. Hang on. Maybe I typed it wrong. MBX. No, that's okay. So we covered 2,600 of the most liquid stocks and ETFs out in the marketplace, and we were adding an additional 6,000 more. We had planned to have that done by the beginning of November, and because it was such a huge addition to our servers, it crashed the servers. So we are in the process of upgrading our servers. That way we can accommodate that. Now we'll be pushing close to 9,000 total stocks in Outlier soon. It's okay.
Actively buying this stock. Now, the ones I like to look for, if you look over here at the transaction heading, are the ones that say open market acquisition. What that means is that insider went with his own money in his own investment account, bought up shares on the open market at market prices. That is an extremely bullish action. The others, like derivative exercise, things like that, these guys get stock options as part of their compensation package. Once they vest, they'll often convert them to stock.
So maybe that's part of his trading plan. And if it is, more power to you. This is something I've literally never once looked at. Okay, he's going to keep talking about Moomoo the whole time. If this fits for you in your trading plan, by all means, go for it. But I don't want you to FOMO into any stock because you see, Warren Buffett bought it, you see an insider bought it. Doesn't matter. Remember, all stocks are bad, and only every once in a while do they act right. There's going to be plenty of times where the stock is not acting right, and you're going to find news of somebody buying it, right? In fact, let's go to United Healthcare. United Healthcare, UNH. United Healthcare is a terrible, awful, no good, very bad stock. However, when Warren Buffett bought it and it was announced, that was the catalyst to cause the price to go up. And now the price is coming right back down, pretty much back to where it popped up on that announcement. This is a terrible, horrible company and stock. Just because somebody bought it does not mean that it will cause the price to go up. So I want you to always have a trading plan and follow that trading plan to a T. And I want you to attend Outlier University. You will get a 100% money back guarantee because it is absolutely free. So let me answer a handful of questions that came through on the chat. Skinny Buff Guy said, holding for 60 years is genius. How are those railroad stocks doing? Probably not great. Dom516 says, Chris, if I wanted to go long on a stock holding for 3 to 10 months, which trade is the best? Buying deep in the money, 80 delta, or buying a call far out in the money? Or buying a call far out of the money? First off, buying a call out of the money is a lottery ticket. What you want to do, and I'm not going to log into my broker platform. When you're in the money, you already have a valuable asset that you're trying to make more valuable. When you're out of the money, you have a lottery ticket and you're scratching off hoping to find the gold right there, right? So for example, if you have an 80 delta option versus a 20 delta option, the 20 delta will cost you less out of your bank account. That is the truth. But every single bit of that 20 delta option is extrinsic value, and extrinsic value ticks down all day, every day, no matter what, period, full stop, forever. It will always go down in value. So your asset is a time bomb. That's exactly what it is. It is a time bomb that is decaying by the day. An 80 delta option is the opposite. Usually it's around 20% or so extrinsic value. So 100% extrinsic value, which will decline, 20% extrinsic value. You can't get away from extrinsic value. That's the power that is the cost to play the game of leverage. Now, because this only has 20% extrinsic value, it will also decay, but at a much slower rate, probably about 1/5 as much as the other one. On top of that, your 80 delta option versus your 20 delta option, if the stock that you want goes up by $1, your 80 delta option will go up by 80 cents. Your 20 delta option will go up 20 cents. So therefore, this is 4 times more valuable to you than the 20 delta option, because for every $1 the stock moves, this one's going to go up more. It's going to decrease in value less. It's going to decline in extrinsic value less every single day. And for every dollar that it moves, it's going to move 20 or 4 times more than your 20 delta option. So for me personally, I would always, and I do always, stick with the deep in the money options, specifically for those 2 reasons. Now, you can do whatever you want. But also, if you're looking at something for 3 to 10 months, I've shown many examples, and I can continue to show examples until my hair turns blue. I don't know if it's going to turn blue. Got a long way to go to turn blue. So what I'm trying to say here is that I could show you infinite number of examples of stocks that move up and stocks that move down. Remember, all stocks are bad, and only every once in a while do they act right. Your job is to recognize when they are acting right, get in while it's trending up, make as much money as you humanly possibly can. Once it hits that peak and those moving averages cross right back down, get out of the way, repeat. So even though you want to be a long-term shareholder, be a long-term shareholder while it's crashing up, and try and be out of the way when it starts to crash back down. Dom, thank you so much for that question. Listen, if you're ready to save time, make money, start winning with less risk, we cover things like that in Outlier University, and you will be an expert just like that, where you can spout off that kind of information just that fast by watching Outlier University and by clicking one of these 2 videos. Have a fantastic day. We'll definitely talk soon.